Hey everyone, in this video I'm going to be talking about investing in stocks and answering the question, what is stock? So, a stock is a type of investment that represents an ownership share in a company. People typically buy stocks that they believe will increase in value over time. So let's say that today you buy a stock for $8, and over the course of a whole year, it increases in value from that $8 all the way up to $16. You have now just doubled your initial investment and have also made a profit of $8. And this is what a lot of people want to achieve when investing in stocks. So when you buy stock in a company, you're really just buying a small piece of that company, which is called a share. And the main reason that all of these different companies sell shares is so that they can raise money and reinvest it back into their business and grow. So as soon as you buy a share in a company, you are given the title of shareholder. This is because since you technically own a small piece of that company, you also get a small share of the profits that that company produces. You can buy stocks through something called a stock market exchange. Stock exchanges keep track of the supply and demand of all of the different companies' stocks, and this will directly affect that stock's value. So let's say you invest in the S&P 500, which is a stock market index that measures the performance of 500 large companies listed on stock exchanges throughout the United States. Over time, your stock value will generally go up. This is because that stock will follow the overall market. Now, obviously, it will still fluctuate and does have the potential to go down, but for the most part, it will continue to rise over a long period of time. Stocks also have a really big money making potential. You could buy a stock and then over time it can increase in value and you could sell it for a lot more than what you paid for initially. Now, this normally takes a longer amount of time unless you just get a really good deal and buy some cheap stock and have the company immediately after just take off and you could sell it for a lot more than what you paid for. But normally, this is not the case. Another way to make money through stocks is through something called dividends. And dividends are regular payments to shareholders. Now, not all companies pay out dividends, but a lot of them do. And I'll be getting more into dividends in a different video if you would like to learn more about that, along with a list of stocks that pay out high dividends. But like I said earlier, the S&P 500 is a stock market index with a wide range of companies that encompasses really the whole market. And over the last 100 years, the stock market's annual return has been around 10%. Now, there have been some years where it's been lower than 10% and some years where it's been higher than 10%. But on average, if you invest in it, it will increase in value over time. There are also various online brokers that allow you to buy individual stocks. There are two main types of stocks, common stocks and preferred stocks. With common stocks, there may be a dividend, but the dividend isn't guaranteed and the amount of the dividend isn't always fixed. Preferred stocks, on the other hand, pay a fixed dividend, so if you would like to rely on a set amount of income, then they're probably for you. Now you have a better understanding of what stock is. If you liked this video and thought it was helpful, then be sure to hit that like button down below. Also, if you would like to see weekly videos on anything and everything finance, then be sure to hit the subscribe button. I hope you have a wonderful day.